Welcome to United Real Estate Capital. These are the rates for March 25th, 2022 as of 1 o'clock p.m. Pacific Standard Time. In the left column here are the note rates or advertised rates. These are the rates that determine what your monthly payment is and how much interest you are going to pay over the life of the loan. You have choices between 3.25 on up to 4.625, depending on which one suits your scenario the best. On the right side is the APR column, or annual percentage rate. The annual percentage rate tells you two things. Number one, it lets you know if there are fees associated with the advertised rate. The higher the APR is above the advertised rate indicates more and more fees associated with that rate. As you can see in this one, 3.25 interest rate and an APR of 3.8. Compare that to this one down here, the 4.625, and its APR of 4.702. And notice that the spread between this 4.6 and 4.7 is not much compared to the 3.2 and the 3.8. That's a much larger spread. So what this indicates to you is that there are a lot more fees associated with this 3.25 rate compared to the 4.625 rate. The second thing the APR can do is let you know which loan is going to save you more money over the term of the loan. In this case, this is a 30-year loan. So even though we just mentioned that this APR indicates there are a lot more fees associated with this 3.2 rate compared to this 4.6 rate, you'll notice that the APR of the 3.25 rate is lower than the APR of the 4.625 rate. This lower APR lets you know that over 30 years, this rate will save you much more money than this rate, even though you paid more in closing fees for this rate. Now, let's say you're not going to stay in there 30 years. You want to know what you're going to be saving short term. And that's really easy. I'll open up a calculator here. You can do this yourself. Let's say you have a 4.375 interest rate right now, and you're interested in refinancing into the 3.75 rate. So you just take your calculator, put in the 4.375 that you have, and hit minus the proposed new rate of 3.750. Hit the equal sign, and that'll give you 0.625. So you want to take this 0.625 and multiply it by your current loan amount. So let's say your loan amount is $500,000. You do 500,000 times 0.625, and then hit this percent sign here, and then equals, and that shows you $3,125. In other words, this loan, the difference in interest rate will save you about $3,125 per year. So this is important because let's say you were going to pay closing fees of about, let's say, $6,000 for this new 3.75 interest rate, and you're wondering if it's worth it. Well, this is saving $3,100 per year. So in just under 2 years, the savings of this loan pays for the $6,000 in closing costs. So you can see here in 2 years, it's saving about just over $6,200 in 2 years, and the closing costs are $6,000. So right at 2 years, the closing costs pay or get paid for by the savings of the loan. And you've probably heard that referred to as the break-even point, the point at which the savings pays for the fees associated with the loan. So it's a really quick, easy calculation you can do right there. Another point I wanted to note in here is that we have to always show you the disclosures. Sometimes they're called disclaimers, sometimes they're called assumptions, but we have to always show you that it's usually put on the second page. I like to list it on the same page with the interest rates, and you'll see that there's different things like the loan amount and the value, and whether it's owner occupied, and the credit score. This all impacts the pricing of these rates. If your scenario varies, your pricing is going to most likely vary, especially with this credit score. Many lenders use a 720, 740, or 760 credit score. I prefer to use a 680 credit score because the nationwide average credit scores are about 675 to 680. So I want to embrace as many people as possible and not just show the highest credit scores, because if you have a higher credit score than 680, your pricing most likely is going to be better. So say for example, I'm going to go to on Quicken's website. You'll see they show the rates here, but then they have a separate disclosures section like many lenders do. Just click on this disclosure section and it'll show you what those advertised rates are based on. And you can see down here at the bottom it shows, depending on the loan, it's either a 720 or 740 credit score is needed. Now if your score is not a 720 or 740 credit score, your pricing for these rates is going to be a lot higher. So you always have to keep that in mind. United Real Estate Capital in particular is very, very aggressive on its pricing at 680. Now I can't say that we are the lowest because I haven't looked at all of the 50-something thousand plus lenders in the United States. I will say this, very, very hard pressed to find lower pricing with a 660 to 680 credit score than with us, because we're trying to cater to the masses here. The other thing that comes along with this aggressive pricing at a 660 to 680 credit score is that we are typically clear to close our loans within 14 days. The process is also much, much easier than most places. We're not going to nickel and dime you for the same documents over and over again like a lot of places, and you don't have to call us. We're going to keep you updated throughout this short process. Also, we work exceptionally well with real estate agents. A lot of lenders do not. Being a licensed real estate broker myself, I know the pains that agents have to bring top-notch customer service to their clients, and we want to help them do that. So if you have any questions, as always, please reach out. You can call or email us. Visit UnitedRealEstateCapital.com or ure.capital. I'll put the link in the description. Thank you again for choosing United Real Estate Capital for your next refinance or purchase loan, and have a great rest of your day.